morning, everybody. Today is February 26, Wednesday, 2020. The stock market is recovering. It's up like 300 points. And I was actually able to unload a couple of investments that I've done yesterday. But what I'd like to talk to you about is long-term investments, but long-term investments into options. I talked a lot about stock options that I was buying basically for 1 week that would expire, let's say, next Friday. And under the normal market conditions, you could actually safely make there quite a bit of money because, you know, the stock market goes in waves, up and down, and the same exact stock goes to the same price point several times a day. And you could obviously make a lot of money on stock options if you buy the strike price through which the stock goes up and down several times a day. However, in the last few days, obviously, we all saw that sometimes the market goes into a crisis and stocks just go down continuously, so they don't come back to the same price point several times a day. They just go through like a constant decline. This type of market behavior obviously needs to be addressed, and your strategy needs to be addressed as well, or changed. And here's the strategy for this type of markets. And it's not too late to do it, to execute it right now, because the market is still pretty low. So what happens is that, I'll give you an example. We have Dow Jones. Basically in 2 days, if you were careful and lucky enough, you were able to see when the stock market was down by 2,000 points in the last 2 days, even though it closed minus 800. But yesterday, Dow Jones was minus 1,000 points or even more, somewhere in the middle of the day. So my strategy for this type of market conditions is to buy calls, which basically allow me to freeze the current price of, let's say, Dow Jones index, but not for just 1 week, but for like several months. So case in point, if you want to trade Dow Jones, you have to trade an ETF that actually matches Dow Jones. And I trade DIA, which is spelled David Iron Apple. And the stock market was trading at around 275. I mean, ETF was trading at around 275 to 270 yesterday. And when it was around actually 275, I decided to buy a call option with a strike price exactly at 275. So basically I wanted to freeze DIA at 275 price point, but I bought an option that was expiring on June 19th, 2020, which is, if today we have February, it's March, April, May. So I was freezing DIA for 4 months ahead, meaning that all the way till June 19th, 2020, I could still buy DIA at 275 price point, even though it might grow to 300 for that matter. And the reason I wanted to freeze at 275 because just very recently, I mean, like a couple of days ago, 3 days ago, DIA was trading almost at $300, and now it's down to 275, or almost 270 actually. And this price drop was unprecedented, and they wrote in newspapers or news sites yesterday that it was like the worst 2-day loss back to back in the last 4 years, which obviously presented a unique opportunity to lock in the low prices yesterday. So guess how much was it to freeze DIA at 275 price point for 4 months? I bought this right for $10 per share. So I put an order. At first the order doesn't want to go through because yesterday this call option was trading at $14 a share, and now I'm trying to buy it at, you know, like 40% discount at $10. So obviously the market was kind of like, you know, bubbling and going down more and more and more, and finally I received an alert that my trade went through. So just keep in mind that if you just buy one call option at $10 a share, it will cost you $1,000 because options are being traded in contracts, and each contract is contract for 100 shares. So even though you buy 1 unit of call option, you actually have to multiply the price by 100. So if you multiply 10 by 100, you have $1,000. So I bought several of them, obviously, but the point is that I bought it, and the reason I did it because I didn't know when this panic on the stock market will end. So I gave myself 4 months waiting window for the market to recover. But the good thing is I didn't have to wait for long. Already today, when the market was up like 300 points in the beginning of the day, I placed a sell order for this thing at $12. And guess what? Somewhere in the morning when the stock market was spiking, this thing actually was sold for $12, and I was able to make a nice 20% gain basically overnight without putting too much risk into my positions, because I gave myself 4 months for this thing to work out. But my rule is that, yeah, maybe Dow Jones by June 19, 2020 would be $300, and I would be able to sell it for, let's say, $20 or $30. But I have to wait for 4 months, and I could actually make my money work harder during this 4 months if I had liquid cash. So the point is that I bought it at 10, I sold it at 12. I didn't risk much. I waited for only 1 day, but I could have waited for 4 months, and I made my money. So if you want to know which ETFs to buy at this point, I recommend you to go to the website 2stx.com, where you would be able to go to the Apple App Store and download, install, and run my app for 5,000 stocks on your iPhone, iPad, and Apple TV. Thank you for your time, and good luck trading.